Hello, good evening, everyone. It's me, Kelvin from Round and Search. So today we will be looking into the coaching session, stock trading. So basically, is the coaching session is more about like the current market. What are we going to do? What is the current market is like? So to tell you, like in the game, what kind of strategies that we should use or to trade in the market right now. All right. So of course, for those of you who have newly joined us, if you like us after watching this video, do remember to subscribe us on YouTube channel and also like us in our Facebook page, and of course follow us as well and give us a like for as a motivation for every one of us. All right, and of course, do share this out to some of your trading buddies if let's say you find that this is helpful to them to find the right way to trade in the stock market. All right, so let's take a look into the market right now. uh right now there's no market for Malaysia side except for US market. We're just waiting for it. But looking at it right now in the market, I think looking forward in the next couple of months, what we see in the market is more likely to move up and downs and towards the downside. So from there itself, if let's say any one of you are chasing after high, or maybe hear or listen to some of the stocks that they share by some of the your friends or whoever it is, be careful with that because there might be a lot of pump and dump going on. In the past few months, not past few months, past few weeks, what we see is that there's still a lot of pump and dump, although there's a bit of price rebound in the market, but don't get too excited about it. And of course, there are still some of the things that we can look into it. I think I shared on Sunday itself, the pre-market prep, that overall the market things is going to be choppy, so a bit moving sideways, but it's not saying that there's no stocks for us to look into it. There will be stocks that is going to move up higher, and also mainly is because the funds are actually looking into focusing into one or two sectors only. So these kind of sectors, then you need to find it out. So that's what I already said on Sunday market prep. So you can look back into our live stream to find out more. And of course, when I'm sharing about this, if you have any questions, feel free to put it down in the question box in the comment section, so I can actually share it out with you guys. Or if you have any opinions, you can feel free to actually put a comment as well. All right. So overall, for this session over here, I'm not going to talk about the longer term thing. I'm going to talk about shorter term things. So we have gone through the market. So on Wednesday right now is in the mid of it. So how I look into the market again, let me do a brief explanation. Maybe some of you have just joined us not long ago, or just see our live stream, watch our live stream over here. We look into the market, we don't use any resistance line, we don't draw any resistance line, or we don't draw any support line over here. The reason is because we find it's a bit late to follow those or indicators. You can see my charts over here are mainly price and the volume. So I'm not just looking into the daily charts over here. I'm going to understand more about the transaction, knowing whether these stocks, they are going to have a rebound or maybe continue move up higher, or they are not going to move the price up higher. So we can actually exit or entry at the very high side, okay, exit at the very high side, and also we entry at the very bottom here. So that's how we can actually use the price and volume, or we call it our own operator analysis. So we follow the big boys in that. So following the big boys is not that difficult. You just need to look into these few things, price and volume only. And most importantly is that once you look into this, you know that how the big boys next move, what are they going to be. So you can't find any of other technical analysis that can actually helps you to exit very near to the high, because if let's say you follow this, then they'll wait for it to break the gap support and kind of things, like say for example here for traditional side. But if you wait for it to gap break, then you might have losses over here. The price really gone down very low, or in between you saw that it break, but then it bounced back up higher sometimes. So that's why I don't like to follow all those, because there's not much of it's more like technical analysis. Like I always say, it's more like for analysis purposes of what is currently. So it's showing us it break the gap support, So right now the price is down. Okay, yes, the price is down. I don't need to see the gap support is broken, then I know the price is down. The price is already down. So what we need to know is that before the price down, we need to see it from here. So I have shared with you guys on last 1 or 2 weeks ago also, I think, that the market is trading at the high side. So be careful about it. There might be a retrace coming. So yes, right now it's going through that right now. So why we, but it's not just last week or 2 weeks ago. Like for example, whether market is good, back into the good market and things like that. Since April, we have already shared a lot about it. Right now, market is good, so you can actually go into trading. And then May, we say that okay, be careful about it. The market seems like there's a lot of pump and dump. And then June really have a big crash over there. So we are able to avoid that. We got out from there, then we came back in around at the end of June to test the market out, and then July able to make profit from the market, and then right now about at the end of July we find that the market is not very stable, a lot of pump and dump, even though the price are moving up higher, but it doesn't seem like it's going to sustain, so it's going to have a retrace right now, which is right now. So that's how we look into it. We're not going to look into just the day chart. We are going to look into 5-minute charts. We are going to look into transaction data so during the intraday. So you see that the live stream that we have, okay, we are not just looking into short-term trading. We also do intraday trading. Of course, some of you are interested into intraday trading. So we are actually constantly looking into the market. So that's why we see that whether the market is going to move up higher. But constantly looking into the market is one thing. Another thing is that you need to use the right analysis to the right way to interpret all this transaction data. Then only you know that what is coming up next. What is the big boys? What are the big boys are doing in the market? So that you can react to it. So if let's say the big boys are aggressively doing pump and dump in the market, then we know that okay, so the market is not really that great. All right, so we need to exit or don't hold anything during that time. So that is the reason why we are different from the rest of the so-called the technical analysts and stuff like that, because we look into much more details of the transaction data. Like for example, if you look into this stocks over here today, the price actually goes down a lot, but what we see over here, there's a lot of volume comes in to support at the price. So this actually gives us a clue that tomorrow the price might just have a very short 1-day price rebound. So we can actually use this for day trading. So we can look into it. All right. So if let's say tomorrow we see, of course, tomorrow we need to look into it. Not to say day trading, then tomorrow morning we just blindly move in and then exit 2 to 3 ticks. So we exit from there, then we take the profit, or maybe goes down 2 ticks, then we cut loss. No, we don't look into that. So we see that this one has the potential. Then tomorrow morning we look into it and see whether the transaction data, the big boys are showing sign that they want to move the price up higher. If let's say they want to move the price up higher, then we follow. So if let's say they didn't do that, then we won't follow. Then we just wait for the right time. Most likely, I think this one might just stay at the side for maybe one more day. The price will just move sideways for one more day, and then only they start to have a rebound. 1 or 2 days like that, then only they start to have a price rebound. So these are the things that we look into it. We are more like, we have to, as a trader and investor, you always need to know that you need to react to the market, not you need to react to the market. But a lot of investors or traders, retail investors, when they invest in the market or trade in the market, they don't react to it. Okay, they thought they react to it, but when they are in the losing trade, then they start to react to their own bias, in a very biased way. React to it is where they will say like things like, oh, okay, the price will go back into their intrinsic value and stuff like that. So if you're buying at the high side, then right now the price is going down, so you are saying the intrinsic value is at a high side or what, right? So like during pandemic time, a lot of people, the stock price, a lot of stock price actually move up a lot, like maybe 2 or 3 double or triple up. A lot of people actually trap at the high side. So when the price gone down, then they start to say like, oh, the price will actually move back to the intrinsic value. But the problem is that, do you know why the price or the value of the stocks are moving up that much during the pandemic time? It's basically because of there's a lot of QE, there's a lot of funds are going on printing out money to help to save the market. So all these financial institutions, they have a lot of funds in hand, so they can't just buy Coca-Cola or buy McDonald's shares and then wait for it to grow, because they still have a lot of funds in hand. So what they're gonna do is that they're gonna just move all into the market, so the price just move up like this. So that time is not because of the valuation of it, it's not because of the intrinsic value of it, it's just because the market is full of funds. That's why the price is being pushed up. So right now the funds are slowly, the central banks and also some of the authorities are slowly reducing these funds out into the market, so there will be lesser funds in the market. So like for in the past, you use 1 billion to push the price up higher in one market, and then right now you have only like 800 million to actually sustain the 1 billion market. Can you sustain that? You cannot. So that's why the price actually goes down lower. So you can't use that to say like previously is the intrinsic value. So that is more like you are afraid of cutting losses. Okay, so this is what the coaching session is like. So I'm going to tell you what is happening in the market. So I know a lot of people in the market don't like to hear things like you're doing things wrong and stuff like that. Obviously, you know that you are wrong because you're in the losing trade. So, but just that it's so difficult to do the cut loss. All right. So my job over here that I always help my student is that to identify their problem, the roots of the problem, and then help them to overcome it. All right. So that is what the coach is have to do. So that is what our training course we have to do. Of course, the first thing is you need to have the right idea, right way to analyze the market. All right. So this is how we look into the market over here. Of course, I think starting from right now, there's a lot of you will start to think like, whether you should actually cut loss for the market or not. So right now the price is actually going down a lot and stuff like that. And the last 1 or 2 weeks, you seem like your portfolio is gaining back some, but right now it seems like it's going back down again. So should you be afraid of it? So it depends on what stocks you are actually looking into, and also depends on whether you are biased or not. Biased towards the what you want, or you are really reacting to the market. So as a trader and investor, what we are doing is that we are opportunists. Okay, so we see opportunity, then we react to it. So you need to remember that whether you are dividend investors or you are or kind of things. I know there's a lot of people like to say, oh, I'm dividend investor. Yes, some of you might really, you are a dividend investor. You invest into those stocks that really have capital appreciation and plus dividend, right? So you can't say that you are just dividend investor, invest into it and then get dividend, but your capital is actually losing 50% or 30% out of it, right? So you can't collect how many years of dividend you need to collect back to cover that losses, right? So up until the end of the day, we are still looking at the same thing, right? Capital gain. So we are just looking at capital gains, right? So right now, market's starting to pull back. To me myself, I'm not so I'm kind of happy on this. It's not because of the market down, because after the pullback, I want to see when the price is moving up, really is there more funds are coming in or not? All these big boys, are they coming back in or not after this retrace over here, or we can call it correction? So if they are coming back into the market again, then which means that this is the rebound, right? The market is going to have a recovery. But what I see over here is that majority of the stocks, they are doing a lot of pump and dump. They are trying to throw the price down lower and lower. Pump up and then throw down, pump up and then throw up, which is very aggressively done that. So in the past 1 or 2 weeks, I can't do any short-term trading, which means I buy and then hold for a couple of days, can't do that. So intraday trading, we're still able to look into it. Some of the stocks are able to move up. Why we can do intraday trade? Because those big boys, they just want to push the price up higher one day and then they throw the price down lower. So during the time when they push it up, that's where we catch the opportunity. All right. So overall, what we see over here is that, of course, in the market, okay, we look into the index side. There are some of the stocks, they are continue going down, which something like this, you can look into it in the as a reference for your future. This is an education. If you see any of these the stock price is moving sideways like this, after the price down, usually followed by the price goes down lower. Okay, so you have to be careful with this. So this is based on our experience. We saw that. So it means like there's not much of people want to push the price up higher. Even though there's high volume coming in, why the price is not moving up higher is mainly because selling. There's people selling. So that's why there's no point to push the price up higher, negotiating or stuff like that. So the price got pulled down lower. If you see any stock in the market having this kind of price movement, like moving sideways, then you have to be careful. Usually they move sideways like this, then it goes down lower. I seldom see any price move up higher after this. So if let's say they do want to have a price move up, the price usually have more fluctuation. Okay, so you can see from here, most of the time when they are moving sideways like this, the price actually continue goes down lower. So this is one thing that you look into it through our coaching session here. The idea of it, at least you know what are the stocks that you can avoid, right? And maybe some of it you know that they have the intention to move up higher. So far we see along the way they have done a lot of good accumulation over here, but just that it's not the right time to move it up higher. We don't see any of the high volume, like really high volume coming back. The volume is just about the same as the previous one. So this price up over here might be just a very temporary. So let the price down, then they might go through a long cool down period from here. So then we wait. Okay, so we need to find what are the stocks that they have accumulation in those big boys. They have accumulation. What are the stocks that they don't have the accumulations? And then after accumulation, what are the things that usually they will do? Whether they will push the price up higher, when are they going to push the price up higher? So we need to know all this very well. All right, so that's for basically you need to know the market. This is the basic things that we need to know. Of course, when you know how to see all these big boys, what are their intention moving up and down, stuff like that, then you will know how this are done. Okay, when is the market going to be bad? Because the market is just in couple of phases. Okay, the basic layman theory, market it always go by the cycle. All right, so cycle, you can put it like this, maybe move up and down like this. It's always bull market, peak, bear market, bottom. All right, then bull market again, peak, bear market, bottom. So you need to know when is the starting of all this cycle, all the stages. So like for us, we know that okay, market is going to turn bad. It's at the peak right now. Then we need to get ready for the bear market. So that's where we look into some of the put structure warrant. Then we can actually, when the market is down, then we can actually make some profit or hedge on the market down. Okay, like FBM KLCI, you have a lot of put structure warrant. Just be careful when you are selecting it. So which one is the better one for you to select into it. All right, so you can find this out in malaysiawarrants.com. So .com.ny, I think. Wait, let me find Malaysia Warrants. Yeah, so it's actually a site by Macquarie. So I like to look into those the structure warrant that they issue, because they always have a good liquidity in the market. They do a really good job in market making. So whenever you want to sell, then there's enough of the market making bid price there to maintain it there to allow you to sell. Okay, so for our side here, we didn't actually look into FBM KLCI because FBM KLCI is relatively more stable. We just look into the Hang Seng Index. So when you're choosing maturity, then you have to look at, if you have to know this, there is maturities in structure warrant, because structure warrant wise, the issuing the duration is usually not more than 1 year. Okay, so if let's say not more than 1 year, along the way when it's getting near to the expiry date, then the structure warrant price will actually goes down very fast. So even though the underlying asset is actually moving according to your put or call warrant, then you will actually still lose money in it. Okay, so it will expire. So when it expired, what it's going to do, they will do a cash settlement. So they'll do a calculation from that. If you want to know how to do the calculation, you can either go to the Warren Education over here, or maybe go to our YouTube channel to find one of my video that I shared on how to do the cash conversion for the settlement in structured warrant. Okay, so again, I need to tell you this is not any of the sponsor. They don't give me any sponsor for showing this. It's just purely based on my own opinions that I find that this is actually, so far that I find is better, because some structured warrant in the market, you just see that the, what you call that, the market making is very bad. Not to say very bad, there's no one is actually at a bid price. So when I want to sell, I can't sell, right? So they don't give me sponsor. I'm just sharing my own way of looking into it. So why I look into Hang Seng Index is because I find that the market is actually overall in Hang Seng Index is the stocks, everything is actually going down. Of course, partly because from the central government that is tackling a lot of having a lot of policy that have some restriction in some of the company. Not to say restriction, but it's more like more strict on the company business from there. So other than that, we see a lot of funds are moving out, and also a lot of people are getting out from there. So that's why I see that the market is not really that good. So if, let's say, if it's a bear market, what my own opinion is that it's more likely to easier to actually go down lower than moving up higher, kind of things, in the very short term. Okay, so this might not be happening for long term, so it's just for short term. So what we see from here, this is how I look into it. Of course, choose those like at least like maybe don't choose 1 month. 1 month is actually very, although if you look into 1 month, the price is actually on this one put warrant because it's in the money. So let's say call warrant, because it's against the market. So it's call warrant means that you are buying that HSI will actually move up higher. Okay, the Hang Seng Index will move up higher. Put warrant is that it's more like a short selling index. Okay, so you can see it's very cheap over here because it's getting to 30th of August, end of this month. Then is the what we call this, is the expiry date. So people think that it's not going to move back to the exercise price of 25,000. Okay, so that's why it's very cheap. Yes, it's cheap, but you will make profit from it. Okay, because it's out of the money. Out of the money is because right now Hang Seng Index is about 19,000. So exercise price for this is 25,000. So you won't exercise this call warrant to get at 25,000 to sell it in the market for 20,000 or 19,000, right? You'll be at a loss. So that's why it worth nothing from here. Okay, if you are looking into this, so it doesn't mean that it's cheap then it's good for structured warrant or any of the stocks. Also the same thing for all these securities. So make sure if you really want to look into it, then go to our YouTube channel to find out more about structured warrant. How does it work? Okay, so I'm not going to share more about this over here. So when peak market, then we can actually look into this. So if let's say during the rebound market, then we can also look into this going for a call warrant. Okay, but maybe depends on which index you want to look into it. Okay, so selecting it, usually what we do here is that we look for something that effective gearing. The high effective gearing means that each tick of 1% movement in HSI, then there will be a 6.6% movement in this structural warrant. So this one is actually quite high over here. Okay, so higher it is, then the more sensitive to the underlying asset. So when you look into this kind of structural warrant or maybe derivatives, please do remember that you shouldn't look into the chart of this derivative. Okay, let's say you look into the structural warrant of let's say for this example is HSI HET. So if you look into this, don't use this chart itself to predict what is the future price movement, because this price is actually following the Hang Seng Index. So you need to look into the Hang Seng Index price movement. But if let's say if it's an index, you shouldn't look into the index chart to roughly guess, oh, it break this support and the price actually goes down lower. Oh, it break this resistance, then the price will actually move up higher based on the index. Okay, no. If you really want to know what is the next movement or what is the trend of the index, then you need to look into their component stocks. Then you find their component stocks. From there you understand overall majority of the stocks in the index component index, the index component stocks, is it at the bullish side or is it at the bearish side? Okay, so are the big boys in these component stocks are selling their shares? Are they coming in to buy the shares? If let's say they are coming in, then you can go for a call warrant, right? So that's one thing that I find a lot of people, when they look into the derivative or this index, they try to look at the chart to the chart of the index to find out. But we need to know the root of all these financial product or indexes. What actually caused the price movement of this index? What are the things that cause these things to move? So are the component stocks. So you need to look at the component stock to find out what is their direction it is. All right. So that should be the way to look into it. You shouldn't, if let's say you are just drawing lines in this, okay, or resistance line or support line, if let's say you break, then it goes down lower kind of thing. I won't say it won't work. It might work sometimes, but it might not work sometimes. Okay, it won't work sometimes. It's not effective. Okay, why is it sometimes good, sometimes not good? Basically, you are not following the right, or you are not analyzing the right thing, that the call to move the price of this index. All right. Okay, so that is what I want to share here today. So I hope that every one of you are able to have a little bit of understanding of the market right now and how you can react to it. So like I say, it's a bit mixed. So what you can do right now, what we do, intraday trade still okay. So some of the stocks, they are going to have some rebounds, so we can still look into some of the stock rebound, because some of the stock, they have already done the retrace last week. So some of it, they are starting to have a rebound soon. Some of it they are on the way of having the retrace. So that's why this is the time you really need to know and precisely follow, look into selecting your stocks, selecting your investment. Okay, don't just hear and say, or hear people say this is good. All right, one thing is that whenever someone wants to sell the shares or distribute their shares, usually they'll come up this kind of way to convince you. First, they'll tell you, hey, I have insider news that this stock is going to double in 2 to 3 months time. Okay, so this is the first one. After so many years, I still hear the same story. All right, then they'll come up with some thing, some story that's saying like, oh, the who tell me that they really got this project, is not announced yet, so you can have a look into it. Then there's you might think like, sure or not. Okay, then they will follow up with some of the so-called very solid things, which is the fundamental of it, the financial statement of it is strong, they have cash rich, or whatever things it is, those fundamental of it, which is like 3 months back old, or maybe 1 quarter old, or 1 year old before. So valuation is different, right? So things change after pandemic. We know things change. So 2020, 2019, about end of 2019 and the early of 2020 is totally different. So 1 year back data of the business, can you use that as reference? I mean, that's my own point of view, but for you to think. All right, so they will come out this kind of story. All right, so if you hear this kind of story, then please be careful of it. All right, it's always this kind of story. All right, so don't listen and things like that. So try to learn. Okay, I mean, making making profit in the stock market can be it has a simple way, but it's not that easy. Okay, it's not saying that you hear and then you look into it. You need to learn how to analyze that. And if you have already learned a lot technical or maybe fundamental, but you're still not able to find the right way out of it, all right, so you can let us know, contact us, all right, so we can actually coach you, let us find out what is the things that make you not able to have a very consistent result from the stock market. Okay, so that's what we do. All right, so thank you very much for joining. Of course, if you like our session over here, do remember to share this to your friends and give us a like, all right, and subscribe to our YouTube channel and our Facebook page. I'll see you guys again next week or maybe on Sunday, whichever day you are free to join us. Okay, thank you. Bye bye.